Greetings to you all. I hope and pray that you and your families are safe. I'm thankful to USIBC for giving me this platform to share my thoughts on a very pertinent topic of financial inclusion, which has tremendous potential not only towards driving development in India, but more so in creating sustainable economic stability in one of Asia's largest economies. When I think of financial inclusion in India, pictures of Indians from across different walks of life, different geographies, and many different cultures flash across my mind. The massive diversity of India's more than 1.3 billion people comprises of various facets. It includes the women, homemakers, workers, entrepreneurs who strive to become financially independent, farmers and agriculturists who work hard to produce crops and contribute to food security, families that aspire to send their children for higher education and fulfill life goals, small and medium enterprises that provide massive employment opportunities, and innovators who experiment to create more environment-friendly solutions and products. Reaching out to these diverse groups of people with the right opportunities and solutions is only possible with technological innovation whose wheels are already set in motion by India's fintech sector. India is now on the brink of a financial revolution with ever-growing fintech adoption by consumers across geographies. With progressive regulatory policies and support by the Indian government, our fintech players are now being fortified to scale innovation to cater to the financial requirements of its people. Credit growth, we all know, is closely interlinked to financial inclusion because of its high correlation to GDP growth. Credit growth rate in India has been 2 to 3 times, retail credit growth in particular has been 2 to 3 times of GDP growth rate in India. You look at the available opportunity now, not only does India have 400 million population below the age of 25, even in terms of our credit penetration. Take for example, dwellings per thousand in India, we are at 220 versus for example 420 per thousand in the US. Vehicle ownership, it is 70 per thousand in India versus 810 in the US. So that tells us about the huge opportunity to create penetration into retail lending. Now, the impact of technology on financial inclusion through credit growth can actually be evidenced by the following facts. One, with the use of technology and credit information for lending, credit opportunities are now available at the click of a button. Only a decade back, even small loans used to take days for sanctioning and involved cumbersome manual processes. But today, small ticket loans can be accessed within a few hours and many a times instantly. With payments becoming multi-channel, 1 million UPI transactions 3 years ago has actually risen to almost 3 billion transactions a month. Consumer credit space is on a phenomenal growth trajectory, with various banking and non-banking units now offering new products to new segments of consumers. No wonder then that India's retail credit industry has grown by a phenomenal 10x in the last decade. Approximately 370 million consumers are ever credit served and 180 million are currently credit active. Credit penetration has improved from 3 to almost 18 to 20% now in the last decade. There is scope for further improvement as we look at developed countries are more close to 80 to 100% of their GDP. Then the third benefit, let's talk about average inquiries per month. Average inquiries have increased from 2 million per month in 2008 to almost 25 million per month in 2021. Change was not just in volume, but also in the construct in terms of serving the customer in different ways from time and value standpoints. The loan is no longer the ultimate objective. Instead, the product feature to cater to India's diverse groups is what really counted. The fourth benefit, credit information technology has helped foster trust in India's lending ecosystem, which has triggered credit opportunities for deserving consumers and driven sustainable financial inclusion. We call this information for good. Over these 2 decades, we have touched countless lives by enabling opening of more than 1.2 billion loan accounts, amounting to disbursements of over 112 trillion rupees worth of retail credit. We have helped drive access to finance for small businesses by assisting credit institutions in opening of over 45 million MSME loan accounts, amounting to sanctioning of more than 80 trillion rupees for commercial credit for business purposes. Over 700 million number of loans have been disbursed between 2004 and 2020, with a consolidated loan amount disbursed ranging to over rupees 140 trillion. credit information technology has played a pivotal role in driving access to much needed financial opportunities during the post-pandemic aftermath. The post-COVID-19 circumstances have transformed the credit industry significantly by compelling digitalization across business processes, and this is going to further continue through the following decade. Credit information sites coupled with technology have helped the credit industry implement and drive several relief schemes like moratorium on loans, the ECLGS scheme for MSMEs and individuals, and the EPGS as well. This momentum of digital lending and use of data analytics-based solutions to drive access to finance for deserving consumers will only get stronger through 2021 and beyond. As we progress on this journey of financial inclusion through technology, there are some fundamental triggers which further need to be built into the ecosystem to speed up and smoothen its path. Number one, in order to tap disruptive potential of technology for driving access to finance for the diverse set of audiences in India, the information infrastructure needs to be fortified further with varied source of data, what we call alternative data in modern parlance. Business corporates, including micro, small and medium enterprises and consumers, need to gain access to credit more easily and quickly from credit providers. The existing information asymmetry between credit providers and potential borrowers makes it unnecessarily difficult for a credit provider to accurately assess and price the risk associated with lending to a potential borrower. The lack of readily available alternative data also contributes to the difficulty of making such assessments, but further inhibits lenders from serving underserved segments of the population and those that are currently credit invisible. This drives credit providers to select borrowers who default in their payments and to ignore borrowers who would not have defaulted in their repayments had credit been extended to them. This causes credit providers to exclude large segments of the population because traditional credit data does not exist for them. This will be rectified only when credit information companies have the ability to access and use non-traditional sources of information pertaining to enhanced risk intelligence to lenders directly or through the emerging fintech intermediaries. The recent move by the Reserve Bank of India on the account aggregator ecosystem development truly needs to be applauded, as the same shall be beneficial for all the players in India's financial ecosystem, including credit information companies. CICs should be participants in the AA ecosystem in order to facilitate faster and cheaper access to credit. The AA ecosystem enables lenders to instantaneously access the asset side and liability side information of a potential customer with consent. For example, currently a bank might not have information on a customer's mutual fund holdings, demat account holdings, balances with other banks, etc., which are all critical information for underwriting loans. Now with the AA network, a bank can access this information instantaneously along with the credit information which the bureaus have of the borrowers. This levels a playing field between data-rich incumbent banks and newer entrants. This combined prowess will also enable fully digital underwriting. Since AAs can retrieve data in standardized digital formats, they are enablers for fully digital underwriting for banks. The fintech revolution as well in India is at a tipping point. Use of technology reduces operating costs for providing services, particularly in the rural and unbanked areas, and will drive the growth through financial inclusion. With banks and other financial institutions using methods such as branchless banking, micro ATMs, and electronic payment services, these modes enable reach to all sections of the society. When supported well by all the stakeholders in the ecosystem, it can unlock the opportunities that exist in India's economy to drive access to finance for the diverse groups of people. With availability of easy and affordable access to financial opportunities, millions of people who earlier remained excluded, such as marginalized sections of the society, women, laborers, small farmers and entrepreneurs, innovators and creators of sustainable products and solutions, and many other people would be able to fulfill their aspirations while contributing to sustainable economic growth for India. The vision of Mahatma Gandhi, whose 152nd birth anniversary we just celebrated on October 2nd this year, was to wipe out every tear out of every eye.